Investing in multifamily homes is a very savvy decision in the real estate world. But let's just face it, that high down payment can block a lot of individual investors from buying rental properties and multifamily units. If this sounds like it's you, then pay really close attention because Fannie Mae just announced that they are reducing the down payment requirement on owner-occupied 2-unit, 3-unit, and 4-unit properties to just 5%. This is a significant departure from what was the previous norm, which really demanded down payments in excess of 15 to 25% for like duplexes and triplexes, making this way more affordable for most individuals who are looking to invest but really can't. These new lending guidelines are a total game changer for creating opportunities for diverse individuals in order to invest in multifamily properties without feeling like it's a game that only the institutional investors can play. Plus, with these policy shifts, you can now have another financing options and a higher chance to actually get the mortgage approved. It's a winning situation for small and first-time investors. Imagine the potential of getting a multifamily property with only 5% down. Stick around till the end of the video and I'll explain how easy it is now to be able to purchase your first multifamily property. This real estate shift is not about how much money people have. It's about opening up doors for more people to enter the housing ownership game, promoting inclusivity and diversity. It hopefully will allow more people to invest in the real estate multi-unit properties. One big driver behind all of this exciting change is a significant reduction in the down payment requirement by Fannie Mae. No longer are you required to put 20% down or more in order to qualify to buy a multifamily property. With a lower upfront investment, you'll be able to now look at starting your own real estate portfolio and maybe save some of that original down payment amount to help with upgrades or adding an upside to the rental building. In case you're unfamiliar with what upside is, it's basically things like adding a washer and dryer to the unit, and then as a result, it makes it more desirable for the tenants, and you're gonna get more income because they're gonna pay you a higher rent. Other things could be like adding an air conditioning unit, furnace, HVAC systems, and things like that. The key with any rental property though, is to make sure that you can cash flow that property. What is cash flow? Cash flow is basically what you make on a monthly basis from that rental property. Meaning like if let's say you add up all the expenses associated with owning that property and it's $2,500 and you rent that property for $2,800, then you've just made a positive cash flow of $300. However, if the cash flow is negative, it can hurt you because now you're digging into your own pocket in order to make up that difference. In the same example, if let's say your all-in cost is $2,500, but you can only rent it for $2,200, then you're gonna lose $300 every single month on negative cash flow. Now in the past, when you've wanted to put less than 5% down for a multifamily, you needed to either get an FHA loan, a home ready loan, or a home possible loan. Even though the home ready and home possible loan programs do have a 5% down payment, they have income limits. So not everyone is going to be able to qualify based on their income if they make too much money or if the location of the property is in an area that just has a higher than average median income. If either of these rules apply, the property doesn't qualify for those two types of loan programs. And when the price is high and the interest rate is high, it becomes difficult because lenders will only allow a certain percentage of the rent in order to calculate the approval amount. Typically, that amount is about 75% of the total gross rent. Another problem is that the mortgage insurance stays with the property for the life of that loan. A lot of times when the property hits 80% loan to value with conventional loans, the mortgage insurance automatically drops off. This will not happen with FHA loans. And unless you refinance that loan after you hit the 80% LTV, it's never gonna go away. I can hear the doubters saying, I don't like PMI, so I'm going to wait until I save up my 20% so I can avoid paying PMI. I would ask you, what do you actually understand about PMI? Think about this. By the time you save that 20%, it's not going to be worth the same value as it is right now. 20% down isn't going to be as big of a number once you're ready to buy. Your $100,000 down payment is going to be worth a lot less in 10 years. Inflation alone can potentially make your $100,000 in 10 years' time worth the same as a $50,000 today. I remember when $1 million home looked like the Iron Man's house in Malibu. Now $1 million house in San Diego looks like this. Owning multifamily units is a viable option for more people now and can lead to a surge in the property ownership rates and fostering a stronger community. So many small investors can now enter the housing market and become landlords. The key to this loan is that you have to live in one of the units in this property. However, unless the lender stipulates it specifically in their loan documents, owner occupancy requires that you move into the unit within the first 60 days of buying it and that you live in there and make it your primary resident for the first 12 months. After the 12 months, the life happens rule applies and then you can just rent that out. Thus, the whole property now becomes a rental. If you watched my other videos, I've made a video about how once in a lifetime opportunity for multifamily properties will hit the housing market in the next 12 to 18 months. Check out my playlist to see that video after you finish watching this one. Multifamily properties is a great investment because you can now own your own business where you can gain all of the appreciation from the property and your tenant basically pays off your loan for you. Plus, you also can get all the benefits of owning properties such as depreciation of the property for tax benefits, property value appreciation, tax deductions, passive income, and so many other things. With multiple units all under one roof, the owner can take advantage of economies of scale. So the cost of management and overhead can all be greatly reduced. And now, thanks to Fannie Mae, with the latest policy, investing in these type of gems is accessible more than ever. Who wants to know how to get these properties for even less than 5% down payment? Well, because Fannie Mae is technically a conventional loan, the guidelines basically say that the down payment of less than 10%, the seller can contribute up to 3% of the purchase price as a credit to the buyer. If the down payment is between 10 and 25%, the seller can contribute up to 6% of that purchase price. And if the down payment is more than 25%, sellers can contribute up to 9%. So if you're gonna put less than 10% down, you could potentially get back that 3%. And that 3% could be a significant amount of money. With a bit of savvy negotiation, you can end up with significantly more seller credit, and that's not a bad thing, right? So now that I got your appetite all going for multifamily properties, what's your next step? It's a simple click on my link and schedule a call with me. I'll walk you through the rest. I'm Scott, and you've been Real Estate Informed.